There was an episode not too long ago, John. You said that down was up was down, cats were dogs, dogs were chickens, something like that. That seems to be about the clarity that we have today.
Yeah, it hasn't gotten any better. And worst case scenario, really, oil, the straits are still closed. Oil is at 92 and climbing. And the funds are liquidating grains. Exactly what you wouldn't want to see before you even get to June. But that's what we have to deal with.
Let's talk about why.
Welcome to Hedge Heads, where hosts John Prischmann and Ryan Tungseth discuss commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. While no one knows where the market's going, they're not afraid to share some ideas.
Well, John, I feel like I say this every week, but this week I really have not paid attention to the markets, and you were just telling me that you were wrong.
Yeah, this is one of the fears that I had here is we had the market incrementally on the way up, and hopefully you guys did, and I don't know what incrementally means to anybody, but now the funds are liquidating. Now, it looked like they were liquidating on what was assured a deal in the Middle East, and we were going to have peace and all this good stuff, and the straits were going to be open. It started selling off last week. Then we went through the weekend, and of course, the same pattern where it isn't open, and they claim to not even be even close to an agreement. And oil went up $7 yesterday in the morning, and then ended up I think $4.50, $5 higher. And another $1.50 higher here than it was earlier today. So the grains keep selling off, but oil didn't. And that was the danger that these funds could liquidate. But I would have guessed it would have been when the straits were open. That's where I have it wrong for sure, that the straits are still closed. The oil's not moving, and the deficits are growing as far as we're pulling out of the reserves around the world, but that's getting used up, and we're going to be running deficits here shortly. So one would think if they put that long position on for the oil, which is pretty much what happened, that they would probably keep it until oil came off, and that's not what happened. So where do we go from here? Really is, what's done is done.
You just short everything right now.
And they're making it more difficult every single year because you guys as producers aren't.
That was not a recommendation. I just want to be clear.
Yeah. No, it's getting tougher because last year it was February, the end of February. Now this year it started falling in May, and people could say, hey, there's May tops often, and that there is some truth to that. But when a market hasn't really moved up more than 25 cents, I don't know that you could call that a top. That's the problem is corn never went higher. Where wheat went higher and beans went higher, wheat had a very good reason for going higher. Beans, not so much, other than an outstanding crush margin. So
I will say another factor,
yes,
and maybe you're about to bring this up, but we in our backyard got a lot of rain over the weekend, and that was not in the forecast a few days ago.
And that is definitely part of it as well. Iowa caught some of that, and that was the surprise rain from going from really dry in a dry forecast to surprise rains over the weekend that only fed the fire. It didn't really open up bad on Sunday night, but you can see this liquidation. I mean, I think they had the July-December, meaning July under the December contract, pushed down to like almost negative 29. That's about as wide as it's ever been. Maybe the 2008 meltdown. And then you have July beans in a free fall against November. That was at minus 14, minus 15 today.
Closed at negative 12.
Yeah, and that's really, it's hard unless you follow this stuff. It's hard to understand how rare that is. That doesn't happen very often. It can happen in really bear markets. So it would indicate.
I'm going to be honest with you because now I've only traded 8 years.
Yeah,
this is for sure the first time I remember seeing it significantly negative. I've seen it probably touch negative.
Yeah.
But I have not seen it negative.
No, and those are going to be years where there's a lot of beans around, not a lot of demand, 2019. And if it has gone negative, it's been because of how bearish it is, and it starts down that, meaning like it would have been here 4 or 5 months ago. It doesn't usually get here towards the end. Very rare. Last year, it was not bullish at all. I think we were 25 cents above this time last year. Ultimately, I think it was only 5 or 6 cents above by the time it went off the board last year. But last year was really bearish. This year doesn't seem like it's as bearish. And with the crush being as good as it is, you would think they need to source these beans all summer long and there'd be a bid on that July contract. But that's not what you're seeing. So is this all just massive liquidation? That's what it looks like to me. So where do we go from here? I mean, that's really what a person wants to know. And I've gotten a lot of calls. And you know what's interesting? I gotten a few different calls. And when you get calls in clusters, it means it's happening everywhere. One guy was from Iowa. One guy was from Minnesota. And one guy was out east somewhere, probably Illinois. The same sort of deal. They have these elevator contracts and they want out of them, for various reasons. And one would be a better basis, or one is an accumulated contract that now doesn't look like it's gonna be a higher price, or they got knocked out, so it doesn't look like it's gonna be hedged. So all of a sudden they had these hedges that didn't look like hedges. So what was interesting to me though is they all wanted to stop doing stuff at the elevator and doing more stuff on paper, so they would have these flexibility to get out of these contracts. And I think guys have fallen onto the elevator and use these contracts because they don't want to make margin calls because times are tight. But it's interesting to see that that's happening, and that, you know what that is? That's good demand. And in the outside markets, they're saying we'll pay you more than what your traditional channels are paying you, which I think is an important point. It means the producer's getting less and everybody else is getting more. So you're locking
Sounds
yourself.
like the cattle market.
Yeah,
used to be.
and I said that today. This is exactly what happened in the cattle market. They abused for so long. The producers couldn't produce for that price, and the grains are starting to feel like that. We lost a third of the wheat crop in the Kansas wheat crop. According to the U.S., it's probably closer to half if they're owning up to a third. And now we're pulling back. If we go to prices where we are when we have a large crop, then it goes to show that wheat no longer really, it doesn't matter if there's a failure or not. You might get a spike up, but it won't last. That's a really ominous sign. And then to see corn, look at this market. Where are we at in September? Where are we at in July?
447 in September,
and
440 in July.
440 in July. See, that's really poor for as good as demand is. Yes, we're overproducing, but you have $92 oil and you have inputs way higher. And I'm one of the first to say inputs don't correlate to the price. But when you get this big a change in the inputs, it will actually correlate pretty soon around the world.
It doesn't correlate, but it sure does affect the production.
It does, and that's
where it's not a direct correlation.
It's not a direct. It's an indirect correlation. It will eventually catch up with the market. So what you're seeing is a meltdown with the funds liquidating. Is this the real market? I doubt that it is. We're at June 2nd today. The usual sell-off happens around the 18th to about the 24th. That's the zone that it happens in often, and it can easily carry into July. So call it June 18th through July 8th. And that's the zone where you're going to find more highs than you will, in May, when you combine the June highs and the July highs. So now we're starting to fall well before that, before you get to see any of the weather and what you have potential for your crop, and you have to make all your marketing decisions. This is very difficult, especially with oil being here. So just to let you know, this is about as hard as it gets in grain marketing. Last year was difficult because they said we had 1.2 billion bushels of corn left over. And of course, we didn't. We had a lot more than that. And the cash market sunk going into summertime. If you have 1.2 billion bushels, you're going to get really tight in the summer. So you had the wrong numbers last year, too low of all things. And then this year, and we collapsed in February. That's another thing. The funds liquidated. So what we're seeing is these patterns where they buy aggressively and then they liquidate aggressively. Very difficult to market in this because these guys could easily still own beans and corn and be adding right now, watching the oil go up. And, so I still am in the camp, though, that unless the straits open up and the oil goes back down, that you're going to have a sustained break here. But yeah, like you say, to your point, part of it's definitely the weather. They just don't see a threat right now. I don't feel like it's anywhere near as good as it's been the last couple of years, but then I don't I don't make the rules for funds liquidating or adding. But where do we go from here? Let's start talking about that and what are some possible scenarios that we could be looking at. do you run out and panic and market all your corn? I've gotten a couple of those calls today. Do I sweep the bin on the old crop? Do I take the 470, 475 if I can get it for new crop corn? Which, truthfully, it's only fallen 25 cents. So that's what guys want to know. The last 2 years, here's what I do know, has gone to 395, and I think that's happened by August both years. But it doesn't stay there. You go to 2024 and 25, I think it was 435, 440 when December was going off the board. If you look at like a September contract, or some of these other contracts, we hit all these highs where we are right now, I think last January, and the year before same thing, meaning you could get this price if you're holding into next year fairly easy. So do you give up the ghost, sell all your grains now after you saw this falling, and then you don't get to see any of the summer weather, see if China steps in to buy, and you give up all this upside, or do you ride this out? And I wish I knew the answer to that. I mean, I do.
You and me both, John, but then we wouldn't have a podcast.
Yeah, the only one that I feel like a guy should still be moving on is the bean, the new crop beans. If you're undersold there, you want to keep sales going there. That really hasn't fallen a lot actually at all.
It's actually surprising because when, like I said, I've been out of the office, busy with other things the last couple of days. So when you said the grains were down and were talking to me about that, I thought, oh, wow, did I miss the soybean move I've been waiting for? And it does not look like anything of substance yet, but it very easily could.
It easily, too. They almost look like they're defending that one, and they have been forever. They don't
since that 70-cent down day. Really.
Yeah, they don't want to let it go. But it does feel like a market that really could let go, where corn, and I've said this, never really went up. Like it did what it did for the last few years. You know what I mean? That's all it did. It didn't do any more with all these higher inputs, possible China buying corn and all this good news. It still couldn't muster anything past $5 much for the third time. But the problem is the inputs keep going higher. There's no way that guys put as much fertilizer on this year. It's definitely you hear that over and over on the phones. To get 183 is going to be tough, especially with this weather pattern. Yeah, we picked up a 1/4 inch of rain. Is that going to make our crop? No, but this time last year, you could tell it didn't need to rain until probably July before you were even going to have a worry. We don't have any of that going on this year. Like, it's not that good. It's not anywhere near as good as that. It's still very low, and we haven't picked up much moisture. A lot of guys haven't out west. So I hate to give up on this crop, but I also did worry that these funds were going to liquidate, and that's what it looks like is going on. So what can a guy do here? Or what should a guy do? Should he sit on your hands? Well, when you talk to guys, a lot of them have some new crop marketed, without a doubt. There's very few people that didn't market any. Again, we suggested market incrementally on the way up. We have 20% on beans. And then, by the way, the price is above where our 20% is, so you still have plenty of time there. Mm-hmm. Now, the question is, should you? Not can you? You can market all this stuff. Should you market all this stuff? Me, I'm gonna look at the weather the next 2 weeks before I make any decisions. But I don't have the corn and the bills to worry about. You know what I mean? So I have that luxury of doing that. Should you look at a put? Is a put gonna? No. It didn't work at the top either. Like, we couldn't make the numbers work. Like, the best that I think it got was $5. It was like 35 cents. That would get you 460 futures and you're upside wide open. But, it's still 10 cents under or 5 cents under what you could get right now. Do you sell futures, or do it at the elevator, hedge you arrive, and then buy a call? That's something that you could consider doing. But let's say you sell 470 futures, and then you spend 15 cents on a call for the rest of the summer, something reasonable that you get to see some weather on, then it knocks you down to 455. Everything kind of leads you to 450 corn. That's the price you could get for the last 2 years pretty easily, futures I'm talking. And it's just, I'm not throwing away all the upside that could happen over the next month and a half for, a 20-cent risk. Does that make sense? When I say a 20-cent risk, in my mind, I mean from 470 to 450, which has been an available price pretty much, any time past harvest for the last couple of years. So that's been kind of a long-winded thing. But to me, the risk to reward in marketing in the whole after a drop like that right here But now that being said, there's been plenty of years where it just keeps on going down from here. And that's the bad news is there's no template for this where we know what's going to stop, and it usually does. It's not October yet, or August where you can find a bottom. This is where it can fall substantially. So keep that in mind as well. Not to scare you, but like there's been plenty of years where it started going down at the beginning of summer and just kept going down. But it is very rare now for the third year in a row. We have zero weather rally at all. Marketing's only gotten tougher and tougher. The good news is everybody had a chance to market at higher prices. I would have liked to have been more aggressive than what we were recommending, but it is what it is. I think we'll still get a better chance at better prices. I mean, if you were a farmer sitting on a lot of unpriced bushels, new crop and old crop, what are you saying, Ryan? What are you thinking?
Thinking what other jobs I can get.
Yeah. What town job can I get to?
No, I mean, as you said, the market is so tough right now. I can easily make the case that this is a slight pullback and we're going way higher.
Yeah, that is the problem.
And that's especially the way oil's acting.
And the strait's still being closed.
Right. So I don't have an answer to that, honestly. Like, it's super tricky right now. And it just because it's down a bit the last couple of days hasn't changed my mind on that. Like, you can easily make the argument for both directions still. I do think this does say we need to up our options, for downside protection. Like, maybe I'm going to advance my program a little faster.
Yep.
But I still want to jump from 20% to 80% on this.
Yeah, the only one that I'd be in a hurry in is maybe beans. Wheat feels like
but
that.
I felt like that on beans since months ago.
Yeah,
Yeah. But
and they're saying the renewables are gonna, there's not gonna be enough, grain, or there's not gonna be enough beans even for the renewables next year. And it's like, the market usually figures out that there's gonna be plenty. I don't think we're going to run out. The crush is outstanding. So basically, everybody but the producer is making money hand over fist with these products right now. It does remind me a lot of the cattle market. And I'm not usually on my soapbox preaching this, but this is where the producers are truly getting hit from every single angle, yet the product's doing better than it ever has. It's probably a good idea to look for some sort of equilibrium here. Hopefully the market does find it. It kind of felt like we were going there with a higher oil. Meaning like we're going to have to bring up prices. South America's not going to be able to produce this with the fertilizer shortages or the price. Like, prices are on the rise. I still think we're in a highly inflationary environment until the stock market pops or the oil wrecks the market. So I'm still like, I wouldn't give up on the upside. I guess it's been a long time to get to this answer, but it's a highly inflationary environment. It sure feels like the grains could get a piece of this. Others disagree, say the grains are going down and they're never coming back up. I would say and
that reality is that's entirely possible.
It is.
Call your local rancher and ask them how the last 5 years were before this passed.
Yeah. You guys haven't had these conversations with these guys. And this how a lot of these guys in North Dakota that I was talking to, just scratching out a living. And oftentimes they would go into town and get a second job. That's how I've met some of them. One was a banker and he was, inside the hedges side of stuff. But now they're having some of the best years they've ever had. But in those years, it was rough, real rough for those guys. And they made it through it, and now they're into better times, and that's where it feels like grains are right now. Like, we're going to start separating the weak and underfunded, because this is a really punishing environment. It's been that way for a while, and it's getting worse with these inputs. So it doesn't feel like we're going down a great road. Now, the good news is the market will fix it. It will get to production to levels that make sense. That's already happening in wheat. It's going to happen in corn and beans, and we will level out and we will go into bull markets. But yeah, this has been a tough road here. And it's so unforgiving because you have to make all your decisions at once like that with no external cues. It wasn't like there was rain in the forecast. The only thing that it looked like is the deal was imminent. And of course, this is like the sixth time they said that, but the market's taking it at face value. And, so it's really hard to give away this grain when you have all the oil and everything else jumping here. And that's kind of what I have to say about it. Very difficult market. I do think we're coming back here. I think you're going to get a bounce.
The only thing I would add to that is it shows how important hedging year after year after year is, though, because even in good years, if you can add that 5 cents to the bottom line, or you can add even 3 cents each year through a good hedging program, whatever it pays off in the long run. There's going to be tough times.
Yeah.
Right? I mean, just from a general business perspective.
Yeah. And these markets all allowed that. Yeah, the inputs are up, but it went to $5.09 December corn. It went to $12 new crop beans, and it went to, we was, even at the highs, I'm told, we did quite get to break evens for a lot of guys, and that's the reason why the plantings are at 150 or all-time lows, 115-year lows.
Wheat, sleep in the street. Isn't that what they say?
Yeah, I think the markets are in a bad, I do say that. The markets are in a very bad mood. I think the funds are liquidating, and the big danger is they continue to liquidate. Unfortunately, no one knows if they're going to or not. Where are we sitting probably in corn? I'd say they're probably 150,000 long. Does that mean they are going to go down to zero and get short? No, not at all. This could be, like you say, a pullback. That's what makes this so dangerous and so interesting this year. I personally think it's a pullback, but if there's a bunch of rain in the forecast and it continues to rain, this very well might have been it. But I wouldn't rule this market out. That's my official stance. And you know me, I'm more bearish than I am bullish. And I think this thing I think it's getting ahead of itself in probably wheat and corn, but more corn than wheat.
I hear you saying that, John, and it makes me want to hedge more.
Yeah, well, that's the thing. You can.
So, I mean, not the whole thing, but man, seeing these prices makes me want to get more hedges on.
I do like the beans. I feel like there's opportunity there because you're still profitable for 90% of the guys out there. Where corn, the profitability is disappeared because of the inputs. Otherwise, 470 would still be profitable. Now,
at least it's cheap to build storage right now, right? Yeah. I mean, that hasn't gone up like all the inputs have.
Yeah, it is. It's not cheap for anything. Yeah, but
that's rough.
It's just a really, really difficult market. Don't feel bad if you feel confused. Everybody is every day. You get a new tweet and it changes everything. Mark Rubio said the war is over, but the straits still aren't open. He said a deal could happen tomorrow, next week, or next month. And he left it at that. And it's like, man, that's super helpful.
At least he didn't throw next year out there.
Well, I think that he just quit talking. He could have threw out next year or next decade. They don't know. I don't think they know. If oil goes back up, let's just say what the oil analysts think, that we're going to hit this brick wall and there's going to be shortages everywhere and it's going to spike to curb the demand. If that happens, I would guess grains are going to be a part of that. And that's what made hedging up there so difficult, is because of the oil situation. So we'll see what happens, but it's just a combination of a number of things, and the funds are liquidating. And then you go over to cattle. I think they're liquidating there as well for various reasons there, just like grains. It looks like the inflation egg trade is officially over, and these guys are throwing it away. I wouldn't read too much into it. These guys don't know what they're doing. It's not like they have the answer and they're just all tripping each other's triggers, what's happening here. So it looks like the egg inflation trade's done, but unfortunately inflation's not done, and that's the hard part.
Yeah, agreed. I mean, in the inflation, it's more across the board. When you were talking, oil spiking because of this, if oil does spike and even holds for
or even
a couple weeks, this can all roll over very easy.
Yeah, the economy you're talking about.
Yeah, the entire economy could easily roll over.
Yep. So what are guys doing in oil? Well, I mean, you have the 3 different size contracts. Can you play the oil market? You sure can.
Yeah, don't sleep.
Everyone's kind of lost interest, though. I think they're worn out by just trying to follow the headlines.
I haven't looked at the options in there. Are they still super spiked?
Yeah.
The volatility is still way up?
Yeah, the implied volatility is still way up there. So there's been a few guys that want to hedge it, and then they really haven't, and then it's kind of gone up. So, but then they're afraid a deal is going to go through and it falls really fast. So it's a really difficult market with this headline trading. I just think it's got everybody wore out. They're tired of this back and forth, but there is no end in sight right now, and there's no stability in the Middle East. And if it were to really ratchet up, which nobody hopes it does, then that could change everything for a long time, especially in the grains. So we don't know if that's going to happen. But, all in all, very difficult market, very difficult to hedge in. It's frustrating. I feel like going fishing, but I don't have time for that. I got graduation. One of my son's graduating this year, so I got graduation parties. Everything's busy. You're busy, and these markets stink. Making it really difficult. And what are you going to do? That is the markets that we're given.
I'm going to give away. Nope, I'm not going to tell how I do it, but looking at options.
Yeah.
And what I usually see and what I analyze for what they think the market can actually do.
Yep.
125 in oil appears to be, at least from the option side of things, appears to be very easily in play.
What is a 125 cost? This is a 125 strike call.
Call for a 125.
In what month?
I'm just looking at July, which is only 2 weeks away. Is still 21 cents to $210.
Yeah. So the options have calmed down quite a bit. I mean, that is way out of the money.
That's way out of the money. But with 2 weeks, the option market says it can get there easy when you're still at that price that far out.
Yeah, I mean it's going to price that in because it virtually could happen overnight if we go back in there or anything happens to the infrastructure, bad. Just as easy as the straits could open up. What I do fear is the straits haven't opened up and corn sold off. Now if the straits open up, it's going to resell off and they're going to liquidate everything. And that's the spike that you were talking about where it really could spike down. That definitely is a possibility. But you have all these things that could happen, might happen, they might not. It's pretty much impossible to know what to do. So like I say, I feel like a lot of guys got a lot of stuff marketed along the way. 60-70% I've heard a lot in beans and corn, and that's usually what guys are comfortable with until they see a lot more weather. So I don't think guys are in real bad shape out there. It's just so difficult to be able to make a decision because we have a lot higher prices.
Here's how badly oil's skewed right now, though. So that's the 125 for the exact same price put for spending 22 cents. You get the 78.50. Okay. So you're talking $15 down, or what is that? 28? No, man, I don't like public math. $32 up.
Yeah. So the puts are a lot cheaper.
Oh, puts are way cheap. $15 down versus $32.
And that's because even if they do open it up, it's going to take a while to get all these stocks rebuilt. But if you listen to the oil analysts, you would have been long everything oil stocks, grains. It looked like the world was going to end. I'm not so sure those guys are wrong. Were they early? That remains to be seen. But if you were to listen to the oil analysts, they still think that we're going to run into this brick wall here. Unless the straits open up really soon and you're going to see $120 oil, $150 oil, possibly $250. You hear the high guy. I don't think it's going to make it there. I think things will break down well before we made it to $250.
I was going to say, I think we have a better chance at negative than $250. But
yeah. And even looking at the U.S. weather, so oil aside, looking at the U.S. weather, this crop isn't made either, which generally by the 18th, 19th, with some rain in the forecast, they often decide, this crop's more or less made in corn. To say that it was made on May 28th when this thing started falling, I don't know that you can say the crops. I don't think there's that much ground moisture out there to even get us into, the third week in June right now. The plant's small and it doesn't need a lot of moisture, but watch those, watch the weekly reports, see if it comes down. But I just still have a feeling this isn't done, but I certainly don't like the price action either. That's very telling and it looks very bad.
Agreed. It's bad and sad, I would add.
Yeah. It's just these pull the rug out 2 years in a row. This one was a little more normal than last year as far as time goes. Still, there was nothing to say that there were we put all this money in. Now let's pull it all out a couple weeks later. But it was a ticking time bomb with 300,000 longs. They could liquidate at any time, and it looks like they're starting to liquidate. And it is what it is. We'll see what next week brings, but not an easy market though.
All right. Do you want to hit cattle before we're done, or you want to call it there?
Cattle, they're talking about the fly getting closer and closer and closer. And a lot of people think, when I say the fly, I mean the one they have the Mexican border closed for. Now, it's within a number of miles. They might even found one in the United States. I didn't see the news today. It doesn't matter. Like the market's deciding because the fly is so close that the border is likely to open up, or at least that's what they say they're trading. I don't disagree with that. They were always going to open this border back up. They're working on sterile fly facilities, but you got a completely different look there too. Cash markets are awesome. Now feeder cattle's coming down, but it's been awesome in live cattle. But the futures are saying, hey, things are changing and we're coming off. Terrible board to hedge with. If you haven't hedged it, it's very difficult. I'm not saying not to do it, but it's just the way it's structured at all these huge discounts. But the market's telling us that things are changing there too. Wouldn't you say? It's got a different look than we've seen, a very different look, a lot more weakness, strength into weakness later in the day, or early strength in the morning turning into weakness. That's getting to be the pattern that we see more often than not. And that was the exact opposite on the way up.
Yeah.
So it looks tired. Looks like an old bull market, but it's still very hard to be shorting in the hole down here. I'm not interested in that. Spreads are all messed up. Not interested in the spreads there. Cattle's a difficult market. But this day
that's the theme of this episode.
Yeah, it's just these markets. It's ever since the Russian-Ukraine war, like that was a little more clear cut, and there is like it was still a very dangerous market. But if Russia hit the Ukraine stuff, in the ports, it was going to go way higher. You always had that threat. This whole Iran thing's a different animal altogether. I mean, it's affecting cattle probably very negatively with demand and oil price, and it's also affecting grains at first positively, now negatively. But it's just this really unpredictable deal. I'd say Russia-Ukraine was a lot easier than this, and that wasn't easy. This one's a lot more widespread as far as people read headlines and then react in the markets. That's what's making it difficult is the headlines print and then the market trades at. We're just not used to that. But it is what it is. I mean, if these are the markets you're given, you're going to have to figure out what to do with it. We'll hopefully on the Insider we'll have some ideas what guys can do. I need to get a sheet out to guys, but yeah, it is. It's tough and it's been tough. But things will change and the markets will change as well and it'll be easier. But I am not enjoying trying to figure this out. I think in most of the accounts, this is about as flat as people have been in a very long time. And I think that's pretty universal. I don't think guys are taking big swings at stuff right now.
I would agree. I mean, across the board. And some of that is that who has the money to take big swings at stuff.
Yeah, that's been a problem in the agriculture sector is there's not a lot of excess funds to be doing hedging right now, and that's why a lot of stuff's been done at the elevator and that stuff. But yeah, we'll see. I am optimistic that they're going to be a little more frightened of the weather next week, or the rains will disappoint here, or the West is still dry. I think you're going to get some different headlines than what we're seeing here. I sure hope it's not this complete liquidation and everybody trips each other's trigger to some low number. And if they are going to do that, they might as well do it now and get it over with so we can rebuild from there. You know what? A market that I'm really watching, though, is that corn. December 27 corn. If they pull that down towards 450, 440, ooh, I mean, that's something that a guy has to, we'll get some strategies that involve that. But boy, that's starting to look like a buy and hold because I don't know how, what is the cash price right now here? 380?
I don't even know.
I think it's about 380. Yeah, this is going to change by next year. Either less corn plantings or the corn price is going to go up. So, these sort of things, if you know where to look, set up stuff for next year and we'll start talking about that stuff. But I don't know. I've worn myself out with all this hemming and hawing. And I've talked a lot, and we really have said nothing. I mean, it's kind of amazing.
I'm glad you saved that till the end of the episode, and not the beginning.
Yeah. Well, I mean, I can put it in the beginning. No, it is what everybody's dealing with. It's not just us. Everybody's dealing with the exact same thing. It's just like yeah, let's short a whole bunch of stuff, watch this, intensify in the Middle East, and then you're going to have just buried by margin calls and be like, that was dumb to do that in the hole. And then you watch it, and this thing's going to go to, 395. It's like, well, I should have been a part of that. It's just one of these really impossible markets. And I think we haven't seen near enough weather to determine anything. That's where I'm at on it.
Yeah. I mean, I'll freely admit I twice already have not bought enough time on beans and paid for it.
Yeah. And now, of course, once your time runs out, what do you think's going to happen? It's going to go straight down like a missile.
Yeah. I'll let you know when I'm out of money.
Yeah. No. Yeah, it's time to golf, to fish, do whatever else you want to do because it's just that time of year.
I like it. Why don't you leave your number, John?
218-731-1578.
Thanks.
Sure.